Let's have a look at China's recent fiscal stimulus and what it might mean for the future of the world's second-largest economy. China has been facing a slowdown in its economic growth, and to counter this, the government has introduced a series of fiscal stimulus measures. This is an attempt to boost activity and hit their 5% economic growth target for the year. This includes lowering interest rates, offering tax breaks, and increasing public spending on infrastructure. At the numbers level, here is what is planned. China plans to issue 2 trillion yuan, roughly $285 billion in special sovereign bonds. The central bank cuts reserve requirement ratio by 50 basis points, which is expected to help release about 1 trillion yuan into the banking system. Fiscal measures will also focus on consumer subsidies and government debt. These policies are designed to encourage borrowing, investment, and spending, all while helping stabilize critical sectors like real estate and manufacturing. One of the key areas China is focusing on is infrastructure investment. In recent months, billions of dollars have been funneled into projects like highways, railways, and energy grids. By fast-tracking these investments, the government hopes to create jobs, stimulate demand, and give the broader economy a much-needed jolt. Large-scale infrastructure projects have traditionally been a big driver of Chinese growth, and the government is betting on this strategy once again. Another stimulus component is the government's push to revive the struggling property market. Real estate plays a huge role in the Chinese economy, but recent years have seen major property developers like Evergrande and Country Garden facing debt crises. To address this, the government has loosened restrictions on home buying in many cities and reduced down payment requirements. This could help reignite housing demand and prevent a further drop in property prices, which is critical, given that real estate accounts for a significant portion of household wealth in China. But the stimulus isn't just about investment and spending. China is also implementing tax cuts and financial support for businesses, especially small and medium-sized enterprises, SMEs. These companies have been hit hard by weak consumer demand, and such the government will look to reduce their tax burden. The government hopes to stimulate job creation and innovation in sectors outside the traditional drivers of growth like manufacturing and property. So, what could this all mean for China's economy? In the short term, these fiscal stimulus measures could provide some much-needed support. In the last few weeks, we have seen their stock market rally significantly. By boosting spending on infrastructure and encouraging consumer and business activity, the government is trying to prevent a more serious economic slowdown. Stimulus can create a temporary boost, particularly in sectors like construction and consumer goods. However, there are potential risks. China's debt levels are already quite high, particularly at the local government level, and this new wave of spending could exacerbate that. Many experts are concerned about the long-term sustainability of using debt-fueled investments to drive growth. There's also the question of whether these measures will be enough to address deeper structural issues. These include an aging population, high youth unemployment, and weakening global demand for Chinese exports. Moreover, while infrastructure projects and property market reforms may provide a temporary boost, consumer confidence remains low. If people aren't confident about the future, they're unlikely to increase spending, which is crucial for China's transition to a more consumption-driven economy. In summary, China's recent fiscal stimulus could offer short-term relief and prevent a deeper economic slowdown. However, the long-term impacts will depend on whether the government can balance stimulating growth without adding too much debt, and whether it can address the deeper structural challenges facing the economy. I hope you found this video useful. If there are other videos you'd like to see in future, be sure to comment them below and subscribe so you don't miss out. Have a great day.